The Bank of England keeps rates on hold, but said the decision not to cut had been finely balanced. Welcome to Market Insight. I'm Ramzan Karmali. Well, the market seemed to have taken that commentary that an August rate cut was very much on the table. Shares firmed and sterling slipped after the decision to keep UK rates at a 16-year high of 5.25%. So are traders right to think easing could begin in the summer? Well, to help answer that and more, I'm joined by Aoifinn Devitt, Chief Investment Officer at London CIV. Aoifinn, thanks so much for joining us. So let's start with that rate decision. Would it have been difficult to cut rates now with the UK election just a couple of weeks away and services inflation still proving pretty sticky?
Yes, very much expected. It was very pleasing to see that inflation level on a top line basis come down exactly to the target. I think that certainly had been forecast by the Bank of England, but it wasn't being experienced in the consumers day to day. So seeing that is confirming that certainly the worst is probably behind us when it comes to inflation. Service inflation, a little bit more of a lag, very much reflecting the trends we're seeing around the world. And if you are to take our cue from central banks around the world, we can see with the ECB, Bank of Canada, and Swiss Central Bank, etc., we're seeing that this is now a trend that nobody wants to be behind the curve when it comes to stimulating the economy.
If no one wants to get behind the curve, does that mean August is when you think the next rate cut will be, or do you think we'll have to wait till September?
No, we're definitely in the camp of expecting a rate cut in August. We think that post-election, there will be a lot of dust settling and that will be a nice boost that we'll see. We've seen a tick up in mortgage arrears among the British consumer. We know that the transmission effect for both the British and the European consumer has been much faster, much more furious and sharper than it was for the US consumer when it comes to rates due to the structure of mortgages there. So there's going to be that pain. There's still the cumulative effect of inflation, which is being felt, even if new inflation is less. And of course, if sterling continues to be weaker, that is also hurting the consumer in terms of their pound going less far abroad. So all those factors will align for a stimulus being due.
I guess more importantly for global markets is what the Fed does next. What are you expecting there?
Well, they're also data dependent. And of course, the numbers are a little bit murky in the US. We're seeing the jobs numbers come down, but there's they're up, but come down in the sense that there is, if we to penetrate those numbers, we can see that it's really part-time jobs that have been added and full-time jobs actually on the decline. A lot of additions in government and the healthcare sector. So not a very robust job picture across the board. So perhaps that is not quite the same as we would see from the top line job figure. So the Fed is also seeing that we can see the service inflation again reflecting the same pattern as in the UK. They are data dependent. They're seeing it coming down. There has been a division among the Fed in terms of the next direction. And we'd expect that probably one or two cuts this year. Definitely there will be some alignment with the election noise.
Now moving on to some corporate news, and Nvidia's ascent seems to go from strength to strength. Will it ever stop?
It's interesting, just as it's ascending as it now, we're starting to find some of the fractures in that argument. One of the fractures would be the buildup of inventory, the increased power of Nvidia consumer and their customer, and having the fact that they have fairly consolidated customers that will ultimately wrest some power away from Nvidia. We can see that the first mover advantage probably won't last forever. And there is still that great confusion and murkiness around what exactly AI will mean for businesses. So the lack of clarity in that respect will dent the momentum somewhat. It will stop inevitably, although for now, with the momentum behind the stock markets as we're in the run-up to the election, I don't see it stopping in the near term, but it's when we need to look to 25, and that's when we'll see if this thesis will continue.
Now back to the UK, and the packaging company DS Smith has been in the news today, slightly better than expected results, but investors are probably more interested in what's happening with the takeover. In April, it agreed to a $7.2 billion all-share takeover by International Paper, but now the US-based suitor itself is a takeover target from Brazilian pulpmaker Suzano. DS Smith CEO said the move by Suzano is not a distraction, but do you believe him?
Well, let's just back up a little bit in terms of the paper sector. Clearly a sector that's in transformation. We're not using paper in our day-to-day office work nowadays, but the paper sector is transformed around, say, packaging, being more environmentally friendly, and also as we move to e-commerce, clearly in demand there. So it's a surprisingly resilient sector given everything that's changing in the way we work. So I'd say that, but not surprising that they're seeing the slackness in some of the demand there. As far as this has been the story of the UK corporate though now for some time. They have been takeover targets. Again, no surprise, weak sterling, very good value. Perhaps bad news for UK PLC, as we can see that clearly some of the crown jewels are being picked off. And equally, having a target in, say, from Brazil, it's probably not going to be a distraction as these things take a long time to pan out. Corporate change is messy, uncomfortable, best to focus on the knitting, sticking to the knitting and the bottom line. So I do believe that part. But what I do also want to share is that I think we have to recognize that the election results are starting to affect the financial markets and the economy right now. We can see that from the aborted Golden Goose IPO in Europe. The commentary was around the European results and that was clearly casting a pall over the market fortunes right now. The same is going to be the case in the UK. It seems we don't have uncertainty around the result, but as that noise continues to circulate and policy change is inevitable, that is going to affect market sentiment too.
Now, Aoifinn, I know that you host a podcast, 50 Faces, which looks at women in finance and diverse faces in finance. And if we're to believe the polls, the Labour Party look like they will get power in a couple of weeks' time, and we'll have a first ever UK finance minister in Rachel Reeves. How significant will that be?
Hugely significant. One of the key things that comes out of my podcast when I speak with women in finance is the absence of role models and the need for visibility. And groups like yourselves in the media are doing a great job of improving the visibility of diverse faces across the board in finance. That then encourages the pipeline and encourages young people to see themselves succeeding in the business, and we will have a more diverse industry going forward. It's very exciting to have, of course, the UK politics has had many female leaders. I think having a female in this role, in a finance-oriented role, just like Christine Lagarde, we will have just more and more examples of how finance can be very much shared more broadly and should be a more diverse profession, should have more cognitive diversity, should have different approaches to risk. And I think hopefully we'll see that. And I'm looking forward to seeing a constant evolution of the way that risk and finance is done.
Aoifinn Devitt from London CIV, as always, many thanks for your thoughts. And that's Market Insight. Don't forget, you can watch more videos on Reuters.com.